The East African community's wide-ranging commodity sectors have attracted global attention over a prolonged period. That's largely due to rising global demand. That's for agricultural products. Specifically, joining us from our Nairobi studios for discussion on soft commodity trade flows, Edward George, Head of Soft Commodities Research at EcoBank. Edward, thanks for joining us, of course, this time in Nairobi. We used to talk to you in London. So give us an idea of what the talk is around the potential of the EAC bloc right now, because certainly has stood out when it comes to all the trading blocs that we have in Africa and pretty much leading the way when it comes to intra-African trade. What's the view right now on where the potential lies for the EAC?
Well, I think there's a lot of excitement about the EAC because it has really become the model to aspire to for other trade blocs. The amount of trade going on, around 20% of all of the trade that EAC does with the world, it does with itself. That's much higher than the average for Africa of 12%. And what is fascinating is to see how Kenya has such a dominating role in terms of being a conduit for goods coming into the region. We're talking about palm oil, petroleum products, consumer goods, and commodities going out of the region, whether it's soft commodities like cocoa, coffee, tea, or whether it's hard commodities like minerals. So that is very interesting. But also, I think a lot of eyes now are on Uganda and how Uganda is developing as a major trade entrepot in its own right and funneling a lot of goods and services into the DRC and beyond into Central Africa.
I mean, when you look at their score when it comes to overall infrastructure, as you said, it has stood out against the likes of Latin America. I mean, the overall score 2.82, but what it does is it ranks Uganda above Latin America against some Asian counterparts. I mean, what is it about their infrastructure really that is so modernized relative to some of these other developing nations?
Well, I think the key here is that you're quoting there the World Bank's Logistics Performance Index.
Yes.
And why that gives a better measure of what logistics are like is it doesn't just look at the cost of trade. Because, for example, to import a container to Tanzania is about a third of the cost that it is to import to Rwanda. But, of course, if you strip out the fact that Tanzania and Kenya are on the coast and just look at their logistics, why Uganda is so far ahead is that it has very good customs clearance procedures. It also has a well-established policy for enabling trade to flow across the borders. And I think that's something that Kenya and Tanzania could learn from. Uganda, on average, has a logistics performance far superior to the rest of Africa, to the Middle East and North Africa. And really, Tanzania and Kenya are only just sitting above the average for sub-Saharan Africa. So there's plenty of room to improve.
Looking at some of the developments really now to improve trade corridors, one of the projects is the LAPSET project, and there's this Vision 2030 that's in place. Just walk us through how this is going to work. I mean, what is the talk right now at this specific conference around how it will benefit soft commodities trade?
Well, I think the key about the LAPSET project is the idea is to build a new trade corridor running from Lamu port in the north of Kenya up to a junction which will then send a railway line north into Ethiopia and westwards towards South Sudan, with the potential then to join on to rail networks in Uganda, DRC and beyond. What is important about this trade corridor is it would take some of the pressure off the corridor running from Mombasa up into Nairobi. And this is particularly good when we're thinking of bringing in imports of things like palm oil and wheat and taking out exports of maize and sugar and coffee. So it will have to advance in stages. It's a very, very ambitious project, but I think there is a real desire among all the different trade community to see it happen. And it certainly isn't just a blue sky thinking. It is happening, it is going ahead, though there's quite a lot of obstacles to overcome.
So just talk us through some of those as you see them. And is the financing all being put in place in terms of actually building this corridor?
Well, I think it's three things. One is geographical, the reality if you're going to put a railway line, a road, 2 pipelines and electricity lines as well across a whole region. You have to overcome mountains, rivers, etc. The second issue is just political. You have to have agreements between the countries, and of course you have local politics. These railway lines and roads are going to be passing through local communities. You need to make sure that they have the proper buy-in and that they're genuinely benefiting from these new trade corridors running through their territory. Obviously everyone wants that, but you have to resolve that. And of course thirdly is financing. It's going to cost a fortune. It's essential to get governments on board, development agencies on board. But when it comes to the actual implementation of the infrastructure, private sector, that's who you want doing it.
We're talking about geographies right now, and of course in Africa, and getting around these geographical barriers. But when it comes to attracting new geographies to buy into Kenya trade and to buy into Uganda and Tanzania goods, I mean, what are the trends that you're seeing right now? Because predominantly it has been the EU that has been the major market. Is this shifting, the reliance shifting away from that?
Yes, I think so. It is very true. I mean, the EU is about a third of all trade and is certainly responsible for the majority of capital goods coming into the EAC. But we've seen that, for example, India and China have become increasingly important as providers of soft commodities, in other words, food, agricultural goods. And of course, the EAC is trading with the rest of Africa. Around a third of the EAC's trade is with other African countries, including its own members. So I think the real potential for the EAC going forward is it is such a perfect hub to sit between COMESA, which runs along the eastern seaboard of Africa, and SADC to the south. And if it can play that role perfectly, I think we're going to see more and more of its trade leveraging towards Africa rather than towards Europe.
From a commodity financing perspective and really trying to get into investing in scalable agricultural products right now, where are you seeing the most interest when it comes to these East African community nations when it comes to investing in specific economies and specific commodities? Anything that stands out right now?
Well, definitely palm oil. Palm oil is an enormous one. There is a lot of processing of palm oil going along the coast of Kenya, particularly around Mombasa. CPO is being imported from the largest producers in Malaysia and Indonesia, and there is almost insatiable demand for it. Sugar is another enormous area of growth across the East Africa community. And of course, we're not necessarily talking about exporting to the rest of the world. The demand is here in Africa. And if you have a good and viable sugar project, which can also produce ethanol, that can co-generate power, you have many options available if you're facing a sugar glut. Aside from that, other food crops, particularly maize, if you look at somewhere like Zambia, it is remarkable. It has become the new breadbasket of southern and East Africa. And in fact, nearly all the maize which is consumed here in Kenya comes from the sub-region. It doesn't come from abroad. So those really are the main areas of most interest at the moment.